The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And thank you to the hosts that we had earlier in the day. We had John Logan kicking us off. I actually did Larry's show. Larry called in. It was very nice of him just to mention the webinar that I'm doing on Tuesday night. I'll talk about that in a little while. And then, of course, Tom and Tommy, great show. And talking about interest rates, I have to tell you, this has been quite a trip. 31-year bear market in yields. At some point, it'll change, and I'll be talking about that on Tuesday night. Will we go from a deflationary period to an inflationary period? I keep meaning to mention this, and I keep forgetting. It just struck me right now that it's like 3 weeks that I've been wanting to say. I wish that it was compulsory for every presidential, when it comes down to the final two, for the two presidential candidates to go to a supermarket with $200, and I want to see what they get for $200. That's all. Doesn't matter what party. It's got one of each party. Go to the supermarket, and then I want them to tell me, because they'll have absolutely no clue, what prices were a year ago and whether or not there is inflation. Keep it as simple as possible. There was one candidate that only need to have mentioned the economy. Have you seen prices of the things that you need? That's it, over and over and over and over. And, right, let's go on. We're looking at a situation where the S&P, this daily chart is giving you a lot of information. I'm going to, because it's Technical Friday, I'm going to do this. I'm going to explode it just for a moment. And I'm going to show a number of different things. You see that the MACD is pulling back. See the stochastic is good at 83%. You see the prices moved up. See the trend line resistance. You see there was a one-to-one expansion that comes in right there. And we hit it almost to the penny. A lot of things going on. Why is this one of the most important periods that we've had in a very long time? For me, it's two reasons. It isn't just that it's an important period, because it's always an important period. It isn't just because I'd chosen the day of the 16th of, well, it wasn't the 16th, it was the week of the 16th, the week of the 15th of August as being an important week based on my philosophy in terms of overall structure of economies and marketplaces and trends. And that we had started a coda phase. It's like a final phase. Final phase, remember, I always talk about Beethoven. You always think the coda is going to wrap up, and then he suddenly modulates to another key, completely different key altogether. It had nothing to do with the original. And then you think, oh my God, this is going to go on for another 20 minutes. And then within seconds, it goes, bump, finished. So this phase can go on for a while. I believe we're into it, and that's why it's so important. For me, in the whole aspect of trends, this is probably one of the periods I've been waiting for decades. All right, so let's get to the nitty-gritties. The Dow, let me do the charts at the same time since it's Technical Friday, INDU. The Dow is down 11. After making an all-time high yesterday, that was pretty good action, right? Down 11 at 18,601, having gone to 18,638, 38 yesterday. We went there, and the MACD had not yet crossed positive, and the stochastic was good at 80%, 82%, but it wasn't great. It wasn't at 89 or 92%. And that says we've got to be a little careful right here because other things can happen. Whoa, other things can happen? Well, what do you mean by other things can happen? What I mean by that is in the chap wave methodology is a very simple technique. You identify the lowest, most obvious low bar, and you count each successively higher peak, and you label them alphabetically, uppercase A, B, C, D. At the fourth highest peak, you can go to G, but at the fourth highest peak, Other things can happen. That's all you need to know. That's where you can get a more serious pullback in time. That's where you can get a more serious pullback in price. That's where you can get a combination. Or you could very quickly recycle higher to a whole new buy signal to buy mode. All right, let's get that out the way. Give you parameters to watch. Into next week, a close below 18,470 will suggest that we are starting the consolidation process, and a spike into the 18,700s says, wow, that is fabulous action. And we could continue for a little while longer because we've recycled on the daily chart, probably recycled on the daily chart. Now let's go to the S&P. So the Dow's completed everything we wanted, the buy mode to a leg D. Doesn't mean to say it's completed the buy mode, but it's completed the action that takes you to a confirmation that you're in a buy mode. You have to go to the fourth highest peak. Leg E in the weekly chart, with just a nominal leg E so far from 18,622 to the 18,638 area. I say you've got to be a little careful, but the technicals here are really good. So price is an arbiter of trend. And as long as the price holds above 18,290, the 9-period exponential moving average, no. As long as it holds above 18,200, that's going to be a good sign. Monthly chart breaking out, we're still in leg C. It's unbelievable. This leg C is just being from last month to this month. It continued with that breakout yesterday. Very positive. 120-minute chart, leg E, a peak E. It says you've got to be a little careful. I'll go into this in a moment. I'll show you the 120-minute chart that I give to my subscribers to my opening call, the analysis, etc. I do add once in a while, I'll add the Elliott wave. Now let's go to the S&P. The S&P, wasn't I just at the S&P? Yeah, I was at the E-mini. So the S&P has gone to, let me squeeze this a little bit here so you can actually see what I'm looking at here. Got it, okay. An F/B. Well, in the Chapman wave methodology, if there's going to be a peak F, if there's no new high today, above 2188.45, but instead we close below 2177, the 9-period exponential moving average, and have an ugly day on Monday, that would suggest to me that this is that pattern that we call the double arch formation in the stochastic, and that the MACD hasn't confirmed the upside, and the stochastic would fail below 80%. And that would say, be careful. Now the daily is suggesting that we're in a sell, going to a sell signal. I need other information for a sell signal, but we're close to a sell signal, and you could pull back further. But the weekly chart is in leg D with the potential doji. We're over 20, now I think it's at like 21% in the single move up from, not single, but in the move up, powerful move from the February the 11th, week of the 11th low of 1810. That's a huge move. You do expect that you're going to have a consolidation at some point. All right, let's just quickly go through. QQQ series hasn't broken up. If it breaks, it goes to a leg D if it's on Monday above 117.37, but so far holding well. It has to hold 115.70 to be able to say that it's still in a buy mode. Let's go to the gold. I'll get to the others in a moment. I just want to finish these. The breaks coming up. Gold is acting very well, but you see that repellent Chapman wave inside track resistance area? It just hasn't been able to break. Gold is up 8 at 1358. It needs to get ready. Now it needs to get above 1374.50 to start leg D. That'll be very positive. Dollar is pulling back a little bit. Dollar's only down 25 cents for making the arc formation. I'll talk about T-bonds and everything else when we get back. Basil Chapman, Tiger Technicians Hour, and we'll be back after these important messages, and I'll show you to the front page of TFNN when we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and I can't remember now if I did this because I was showing it previously as I came on air with my charts. I was showing the 10-minute chart for E-mini. I always do that. There's a potential V-shaped pattern because it made an arch formation, went down, tested, made a low of 2176.75. Now it's attempting, it's in a peak, probably a peak C in this 10-minute bar if it doesn't make a new recovery high above 2182.50 in the next few minutes. Most importantly, what we're looking at is there's a potential for a V-shaped pattern. That says it could get you 2184.50 by 1 o'clock this afternoon, but that's only if 2181, 2180 support holds. And I just need to show one other thing as we're doing this, since it's Technical Friday. I hope this is the chart. Let me just check it out. Yeah, look at all that resistance in the 2181.70 to 2182.15 area. But it is above the 200 period moving average in the 5-minute chart. That's going to be important. Look at those nice bottoms that were made right there. So we'll see. This is close. In fact, after such a big day yesterday, I'd expected that we'd have a fairly narrow trading range, maybe a doji type candle. I did expect there was a chance that we just squeaked to a new recovery high today. We'll see. We're not far away from it. 97 got 40 points. You could do that quickly in the Dow. And then the 2-minute chart right here suggests that there was some resistance. We did almost get to the target. I had circled over there. So we'll see what happens. Day's young, very young. We're not even 2 hours into the trading day. Now, I had a question about the QQQ. Since this is a Technical Friday, I want to do this. The pattern that we're looking at now, if you don't mind, I'm going to expand this. I'm going to make it nice and big. The previous top was a peak E at 111.44 back on the 19th of April. Pulls back sharply, has a retracement to a peak C minus at 110.75 after hitting 104s. And then it comes all the way back down. It's like a 8 to B equals C to D, almost like that. And then at 101.75 in trough E, on the way down. We call them troughs, trough E/C. It has a wonderful spike, and now we're into the movement of the daily in the QQQ series, which is the NDX 100 trading vehicle, and it's gone to a low of 101.75 and run up. Really, this is quite extraordinary. 16 points, 15, 16 points. And you can see how it's slowing down. It's arching over. How it does this, just pure gravitational force. Market moves up sharply, and then all of a sudden it goes to peak A, B, C, D. What was our requisite in the Chapman wave methodology? We wanted to see a D, and it got to the D, but within 4 bars, not 3 bars, there would have been an instant restart, but it has all the characteristics. The MACD is turning down, but still good. It could even deflect a little bit higher. The stochastics at 89%. That's nice and strong and flat. I want flat. Remember, just getting there is not good enough. You've got to hold in that 85 to 90% area to really continue the movement up. But look at this tiny little candle that's formed today. I'm going to expand it now. Here we go. Look at this. And this is suggesting to me that it would be very easy for the NDX early next week just to have one little pop to 117.38, and that starts leg D. If it doesn't do it today, I don't see it doing it today, but it could do it Monday or Tuesday. And look at the way it's only come down to the 200 period, the 9-period exponential moving average, that black line, very seldom. And since it broke above back on the 29th of June, not once has it closed underneath the 9-period moving average, and only a couple of times has it even touched that line. So that line is really, it's like a, in a magnet, if you turn it around, it becomes a propellant. It's either a repellent or a propellant. And in this case, look, it's repelling the price or propelling the price away from that 9-period moving average. So the closer you get to it, the closer the chances are that at some point very soon, next week probably, we'll start testing 116 and maybe go under it. Right now, I think we've still got some upside. So now that wasn't the question. The question, I think, was more pertaining to the monthly, but I can't do that without looking at the weekly, and here's why. The Dow, look, in August, the NDA, the QQQs went to 84.75. I'm not sure it actually traded it there, but it did go down there. I mean, the price actually went there. Now what we're looking at is it goes peak A, B, C, and then it has a huge time and price pullback at a C. There couldn't be an E to an F because that spike went below the starting point, the up arrow of that new buy mode right there on the 16th of week of the 16th of January of 2015. So no matter how I count it, this is either A and this is B, or this is a continuation of C and it's a D. So to be absolutely strict to my methodology, this has the old D because it's still active, and it has a new B. Either way, it's saying that with a move like this on a percentage basis, as well as going from like an A to B equals C to D, this is a standard lightning bolt pattern that everyone talks about at here at TFNN. This is very positive because the MACD just started to flatten out at 97%. Sorry, the MACD is still expanding, and the slow stochastic is just flattening out. And that flattening out suggests to me, oh, I think that's a call that I've got to take. Well, tough luck. That flattening out is going to say that if the QQQ series is able to hold above between 115 and 113, and the stochastic remains above 90% even on a pullback, that's still very bullish. But wait a minute, let's get to the monthly chart. And that really is the question. Monthly chart, I'm going to show you something absolutely extraordinary. Here we are at 117.12. The high yesterday was what, a little bit, no, 117. Let me just get that off. There, okay. So what I'm looking at, let me just squeeze this a little bit. Okay. What we're looking at is within the context of the all-time high of 120.50 in March of 2000, we have gone down to $19.76, an 83 per correction into October of 2002, ran up to October of 2007, 54.70, down to the low of November of 2008 at 25.05, and now we're in the 117s. And what does that say? It says that there's a really good chance that markets that are going towards all-time highs, no matter how long the time takes, tend to see that last level as a magnet the closer that they get. In other words, normally you think, oh, it's going to be repelled, it's going to be repelled. But in fact, the closer it gets to the all-time high, memory of fund managers goes to any particular point of reference. And their reference would be, if they even remember it all, 120.50. The 120 level is what they'll say. And we're getting close. And that says to me that there's enough buying pressure in the QQQ series to say that in the year 2016, we should go through that level. How we handle the level and what letter we're in is going to be very important. If we pull back and then pull back to, say, 112, and then start another move up for leg C, and under 120 we pull back again, we might only get to that leg D just above it, go to 122 or something, and then that's it, it's all over. Or we could get there in leg C, and that's very bullish, because no matter how much you pull back, you should go to a D. I'll be back, Tiger Technicians Hour, Technical Friday, and then we'll talk about the webinar coming up this, 5 days time, Tuesday. I'll be back, Dow down 17, and S&P's unch.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. So let me just go to clear this up now. What we're looking at, so in the QQQ series, it could recycle because of the action that we're looking at. This peak F should have been a much sharper decline. Gs can see it, but Gs, it's almost instantaneously. You get a G, and the next day should be down, 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 down. So I'm suspecting that we are looking at a peak C in the Doji C. Very small candles. All of them are very small candles. There's not all that much conviction, but price just moves up because there's buying pressure. So I'm looking at this and I'm suggesting to you that we're going to make a new high in the QQQ series probably early next week. At least that's the way it looks, just above 117.37. And that's going to be a clue to many things. So let me just do this quickly because I never had time. The NYA is in leg D and acting beautifully. The stochastic's at 86 and it's just about, the MACD is just about to turn positive. But I'll just give you the parameters. At 10,841 up 5, I want to see something in the 10,900s by Tuesday or Wednesday of next week. That'll be incredibly good news. If there's a break, by Wednesday of next week, the NYU is trading under 10,700, only 140 points down. But if it trades under there, this is a D, and we're going to be going down a little bit deeper. And we'll be testing the lows of 10,619 made 2 weeks ago. All right, so that's very clear. And the VIX index, I'll just do that, and then I'm going to go to all the questions. Oh, I didn't even get a chance to look at the emails or the texts. So the VIX is down at 11.30, it's down 38 cents. On a weekly basis and on a monthly, I can't do the month because the month isn't even half over. But on a weekly basis, a close down here, even though it's alternate count leg F/B, all I can say is that it is suggesting there's buying pressure. And that's why I don't want to get overly short too soon. I want to stay in our long positions. We just added a short this morning. I wouldn't be surprised. Just a small position, and I made a very tight stop. Wouldn't be surprised if it's taken out. I'd like it to be taken out because it's going to say to me, that sector's still in play. And there's another sector I wanted to shorten, and it hasn't popped up to that level yet. So I'm quite comfortable in our positions, and we have a strategy in my opening call. And I'm going to make a recommendation. If you're thinking of coming to my webinar on Tuesday night, since you're going to get my newsletter for free, we're already starting to try to implement positions now before Tuesday night. Tuesday night, I'll give positions that we'll be taking like we did last time. Remember, we're looking at one of our positions. I can give it to you right now. MWA, it's just about to top out short term. It's in leg D. We got it at 10.69. It's trading at 12.45. Nice percentage gain in the water area, Muller water products. Leg B in the monthly, this is that Chapman wave stalk leg formation. Look at that. So far acting well, but I think it's getting toppy. And what do we want to do with it? Get out, add to it, just get out and wait for a certain price. There are a whole bunch of things that we need to talk about. This is the Chapman wave stalk leg formation. And what happens when it does, the stalk leg makes its top. What does it do? All those sorts of things we're going to discuss. So this is the type of thing that we'll be doing. We did that in June the 6th. That's where we started implementing. We did have some steals that got out of it way too early. It was so stupid. I did it beautifully. We had an incredible move. Look, from June the 6th. April, May, June. Where's June? From July. From there, look at the move up in steals. In fact, some of the steals went doubled in price, like a US steel. However, that's the way it is. I'm thinking steals will come back. What do they do next? So these are things we're going to discuss. So two things quickly. One is the VIX index, just on a very short-term basis, that you know what I'm looking at. The VIX index trading at VIX, I just looked at it, trading 1130. By the end of the day, if there's a sudden sell-off and the VIX bumps from 1130 to 1160, that's okay. But if there's a really big sell-off and the VIX actually goes to something like 1199 or 1190 over the 9-period moving average, that'll be a change. At this point, looks to me like there's still buying pressure in the general market. That's why I think the Qs have recycled. It isn't a G/C. It is really a leg C that we're looking at. Okay, got that out the way. TLT trading range, I just think, broke above it. Broke above the resistance line. I still think the TLT, the TBT, the inverse, making an arch formation that goes from a lowercase h to an M, it's going to be very important because if at 30.51 the TBT closes under 30, that's going to suggest that actually the TLT has legs to tackle the left side high of 141.68 from the 29th of July. And that'll start a different wave count because this is already AB. We'll see what happens. But if it breaks above that decisively, it's broken the downtrend line, and that's important. Now, a couple of other things I wanted to do is the dollar is the same sort of thing, trading range just for now, but it does look more like the H formation, and that H formation says a break of today's low, and you will see a test of the round number 95 low of the 2nd of August, and that will help gold. I love the way gold is acting. I just don't know where and how I want to get in, and I'll be talking about that in my webinar. Do we start a position that just says, you know what, you're going to have a 15% stop, or even a 20% stop. I want the position because we want to build on that as the year goes on, because there could be an inflationary aspect going out a year. I don't know if I want to deal with it now, but I'm going to talk about it. I'm going to suggest some people might want to look at it, if that's, because the commodities are actually holding a lot better than I thought at this particular point. That's enough. Let's go to MPC. I think it was MPC. Let me just see what MPC is. Marathon Petroleum. The question was, in the den, I'm going to try to find it here, MPC, because I won't be able to find it, but it was a question on MPC, Rio and the others, BHP. Yeah, let me just do this for the moment. MPC is Marathon Oil. The pattern that I'm looking at is the same pattern that we're looking at in the IBB in a number of areas. It's the lowercase h, like that goes to a potential M-shaped pattern. Unless it can break out, well, it can only break out if it successfully held the left side low, and it did. So I'm going to draw in the two patterns that are going to be fighting patterns for now. That's the H that goes to the lowercase m. Always think worm, looks like a lowercase m. And the pattern that said, I did not break the low of the week of the 12th of February, of 29.24 in the most recent pullback to 32.02. If I, that's MPC, Marathon Oil, trading at 41.77 down 13 cents. If it breaks and closes above 43.26 for 1 out of 2 weeks, in other words, it just has to do it 1 week, that'll be very important, because it's going to say, I can go to the next resistance. There is no resistance, so you get all the way to 53. I don't do that. I don't say we're going to go from 41 to 53. I go step by step, and all I'm going to say is, on the daily chart, look, let me just do this real quickly for you. The up arrow goes on the most obvious lowest low bar to the left. You do want to go enough to the left to know that you're getting what you wanted. Let me just do that, because I might not have got it. Yeah, I have. Okay, so that's B, and then you've got an inside buy that goes A, B, that should be an A, sorry, that S should be a B, an A, and that's a C, and then you get to a D, and the D is underneath that B. Typing, and that's an E. I'm going to call that an E for now, because it's all one part of the swoop. I'll make it real simple. And the question is, if you're in it, hold on. At 41.81, you've got a lot of support between 40.32 and 39.68. But if Marathon Oil closes above 42.59, that is really important. That's going to say that I think I've got an instant restart, recycle, and that could be F/B. And that would be positive. So yes, I think I actually like it for some reason. I wasn't going to like it before, but if you don't have it, I'd still try to wait for a pullback. I'll be back. Basil Chapman, Dow's down 25.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a lot of questions during the break. I just managed to get to them. I've covered a bunch of them. I don't think I've got time now to do them all, but let me just double check the time. Let me see. Okay, let me start. Oh my goodness, they go back. I guess I wasn't looking. Okay. Well, let me go one at a time here. So, Adam, yeah, I dealt with... first of all, here's the 10-minute chart. We got that peak D. It was underneath the previous high. And now I can put an arrow, a down arrow. It could restart. That's fine. But the arrow, down arrow says sharpest pullback. What do we expect at D? We expect the sharpest pullback. Is that the biggest red candle? Let me open this up so you can see. This is just a live demonstration of what we do all the time. If you're here and you're able to take profits in your short-term trade, that would be very nice. And maybe there'll be another one, so that by the end of the day, there's a bit of a rally. But in the meantime, I'm going to answer some of those questions. And the questions are steel. So MPC, the monthly question, the question on MPC was really a monthly question, and it's real simple. You'll get confirmation that there's a much greater move if on a monthly basis, MPC, Marathon Petroleum Corporation, is able to close above the candle of April, which had a high of 43.26. Until then, it's just chop, chop, chop in this area. And this is one of those cases where maybe you want to be shorting as you get to the top here, or just getting out of part of your position in the 42.50s, 41.70 to 42.50s, and then just saying, I'm going to add back at about the 40 area, give or take 50 cents up or down, and see what happens. Or just have patience, say maybe we'll even go back to 38. And this is the time that maybe it is going to break above. That's why I'm saying keep a core position if you're already holding it. But if you have no position, this is the point where I'd step back a little bit. It's got a peak E. I'd have to give it maybe 20 cents or more. 40. If it closes underneath by Monday, if it's closing underneath 41.30, maybe it's a short just for a quick pullback. I would do nothing. If you haven't got it, I'd do nothing right now. Because if it breaks out, the next pullback will be a buy. But if it doesn't break out, it's in a trading band. That's all I can say. Monthly wise, gets to the 43s. It's really positive on a monthly basis. That means it has to close the month. Can't just get there, but it has to close the month. Oh, you don't have it? Hold off. Give me another yell at any point if it goes down to the 40, anywhere close to 40. Okay? Thank you. Now, the next question was X, US Steel. I did that. I did Steel itself, SLX. X is just it's done for now. Just I would not be touching the steels. They've had a fantastic move. They've given back quickly more than they should have. This says to me this is a far more serious pullback. Have patience. Could even go into a trading range with the rectangle formation from 20 to 24 and just trade there for a while, quite a while. So be careful. Now, if we get this rotational correction with the steels correcting, the IBB is about to correct. Nice move today. It's holding nicely at up 55 cents. But I think it's in the area where it wants to start pulling back. But I don't know if this is the big pullback because it's had a massive decline. And maybe it only goes down from 291 to 285, 284, and then has another bounce to the upside. So this is one to keep on your radar. A lot of things are going on. Next question was NE Noble. NE Noble is Noble Corp. Now, please don't touch the ones making new lows. Remember, you want stocks that are making new highs because new highs tend to garner new highs. New lows tend to garner new lows. Don't touch. What was the question? Down for the week? Yeah, down for the week. The XME is also. Why do I not have this? Oh, Spider Metals. Oh, I don't have this notated. I did have it notated. A, B, C, D, E. This is a peak. E in the weekly. Be careful. I think that the basic materials, the metals and the mining are pulling back. Gold itself, now gold stocks and the miners did fantastically, but gold itself didn't do as well. Now I think gold is holding okay because the dollar's weak. So there's a big relationship divergence. So just be careful. Trade the stocks, have patience to get the stocks. Many of them have had huge moves. Next one, what is this, CME? Hey, Basil. How have you been? Excellent call, sticking to your guns long while many are shorting or like me, waiting to go long on a pullback. You've mentioned many times the coda that we're in and that we're about 1/3 into the final phase. But I also hear you see evidence for a new secular bull market after one and a half year base we just broke out of. You've mentioned many times the coda that we're in. Yeah. Could you please give your thoughts on the latter? Thanks for all you do, Chris. I'm going to be doing a lot of that in the webinar. I need to just filter my thoughts. I don't want to babble. I want to know specifically how I'm going to talk about it. I've got all the ideas. I just need to synthesize it. I'll be doing that on Tuesday night. But a new secular bull market, I don't see a secular bull market. I do see a spike to the upside, like all spikes that culminate major bull markets. That's all. Yeah, it's something that we're in two different planes here. All right, so I'll be talking about that. Next question is, so Bob says BKS, JP Morgan, -1. Okay, let me just do this. So the XLF for me is a big test. We are long the XLF, just a small position, but we're long. Only because there's a chance that in this move that's coming up, maybe we actually see the bond yields start to move higher. I don't know. In the next break, I'll switch to my long-term chart with the yields and see where we are in the 3 weekly time frames, the 30-year, 10-year, and 5-year. All I can say is that. So, what did you ask about BKX? So the BKX is the XLF. It's the trading vehicle, and it's the Select Financial Spider Fund. And you can see we've got to a D. Now this D is with the stochastic and the weekly at 91%, and the MACD is still good, but the price didn't really move that great. And the monthly chart says, I'm getting a little tired after breaking all these trend line resistances and all that. So this is a big deal. I'll talk about it on Tuesday. The question is going to be, in rotation, in the sector rotation that I'm anticipating, will the XLF finally break out and go from the 24s to the 28s and the 30s over the coming 6 months, 4 months? That's going to be a big question, because if there's nothing in the XLF, I like to see the financials moving with the market, but they don't represent the market anymore. They used to be a very big part. Goldman Sachs, they don't do anything like they used to. They're just the old. It's an old hack company. It's making an arch formation in the weekly that could go to, it went to a lower low. So the best it can do is to test the high of 168.90. It's at 162.86 right now. And then we'll have to see, has it got the strength to break out? If the technicals continue strong, it will. And that's going to be the big issue for me. I'll be talking about these financials. I want you to be in positions that are going to be good positions for the next phase, going into the fall. They don't call it the fall for nothing, remember? So that's, oh, there's that buzzer. Completely forgot about it. Off my mind. Oh, well, it's gone now. Oh, no, it hasn't gone. There it is. So, no, press the button. Come on. I'll figure it out one of these days. I don't know when I will. Someone will have to remind me, I guess, because over the weekend I'll be doing charts, getting ready for my Tuesday show. Let me do this quickly before we go to the break so that you can look at it during the break. This is going to be the webinar, New Highs to Come. This was 3 weeks ago, maybe more. And we got the new highs. What's next? This is a 90-minute live event with Basil Chapman, August the 16th. And I'm going to be discussing the socio-political, economic, the trends, smoking, drinking, dancing, clothes, and the stocks. I'll be back straight after this.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, we're back, and as far as I can tell, there are things going on that are a little bit unusual, and I'm going to be discussing it right now because the GBP USD, this is the Great British Pound dollar currency pair, is making an arch formation, continues the arch formation, especially in the weekly chart. Nothing looks horrible. This is going to be key because in the next 3 days, if it starts to break even just a little bit lower, it's going to test the low that was made the week of August the 8th. At 1.279. If it breaks that, that is just terrible. So this is not only an important week for me, but it's an important week in the context of where we are. We've gotten to the peak, the leg D in the Dow. That's what I wanted. I spoke about it yesterday. I was very excited that we actually got there. But here's the 120-minute chart. We've made a peak E. That could be 5 right there in the Elliott wave. Depends on how we close today. The Dow, you can see the stochastics at 81% is okay, but the MACD could deflect lower. This is a really important couple of days. Maybe the Qs do not make that leg D. Maybe it's a G. But whatever it is, the parameters are simple. Right now, I think is the most critical period, because I think there are so many weekly charts that are making a D or an E. And if there's a weak, W-E-A-K, W-E-E-K, next week, that means that we probably have set in place the consolidation phase that should last a good few weeks. It could last a month, or maybe even to September, going into late September. So this is a very important period, and you want to be prepared for that. You want to not be I would not be overly long at this point, and if I have really good gains, I wouldn't get out of the good stocks. I'd raise the stop, or I'd take off something right now and say, great, now I'm going to put a stop in, and a very comfortable, I'm just going to relax and see what happens to my stock, because the good stocks should hold very well. The ones that have participated in the move in August to the upside should be the ones that hold their strength going into any weakness. I can just tell you this, that if the Dow breaks into the 18,730, 750 area, that's going to recycle for at least another week or more to the upside. Make it real clear. So go to the front page of TFNN if you really want to participate with me. This is us together. People send me charts all the time of things that are happening, as my brother did unknowingly yesterday when he sent me a chart from Sydney, Australia, to say the Sydney Opera House is having an incredibly expensive redo. And on the site that he sent me, they have a whole bunch of things going on with new buildings. We're using fantastic materials. This is a really creative period, but it's a period that essentially is doing the building and everything for 40, 50, 60 years time, 30, 40, 20, 30 years time. It's just, that's the way it is. So I'm going to be talking about that. I'm talking about the Empire State Building, as I always do. I'm going to be talking about the new modern buildings all around the world, getting emails from people just in places you've never even really heard of, saying, oh, my city, my town's building, or whatever it is, and it's the most expensive, whatever. This is the period of exuberance, of excessivity, and I suspect that it's not going to conclude quietly. It's going to be a really noisy end, and it could last a little while longer. I'm also going to talk about the politics of politics in my webinar. I'm not telling you who to. I couldn't care who you voted for. It's your business. It's what I'm looking at. And I always say, you only need 2 or 3 words, and that's all that the theme should be. And even Make America Great Again, it's got one too many words. And I don't really know what Hillary's theme is. Avoid prosecution. I don't know what it is. But she's got everything going for her. It was the Republicans to lose, and they're doing a pretty good job at this point. What can I say? There you are. I did inject a little bit, but that's the politics of politics. I'm not telling you who to vote for. I'm just talking about how things can go wrong in a period that looks so right in many ways and so wrong in many ways. It's going to be very exciting. I'm really looking forward to it. And of course, what stocks to buy and what stocks to short, and what we might have done already going into Tuesday night. Check it out. I'll be back on Monday. Have a wonderful weekend. I'll be sending posts out over the weekend to my.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.